Welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm talking about 9 popular companies that are cutting their dividends in the wake of the virus scare. This is important news for investors, especially those who have not established a position yet in these companies, to be aware that the dividend has been at least temporarily suspended. And as always, quick disclaimer, this video is for entertainment purposes only. Make sure you talk to a financial professional before you take on any risks with investing. But if you do enjoy stock market analysis, investment ideas, and personal finance videos, then I invite you to subscribe to the 40 Finance channel. Thank you to all the subscribers who have signed up so far. And first on our list today is the Boeing company, ticker symbol BA. And Boeing's annual dividend prior to the announcement was $8.22 per share. That's on an annual basis. So a pretty steep cut for investors of Boeing. Stock price right now is at $158, which is well off of its 52-week high of $398. And Boeing's basically gotten, hit on 2 different fronts. They obviously had the safety of the 737 come into question after a couple crashes, so they were already digging out of a hole. Then you get the virus scare coming in that's basically canceled a ton of orders for Boeing, and they're actually on the list of potential companies who will get bailed out by the government. So things are not really good in Boeing right now, and their dividend was one thing that they had going for them. If you're trying to buy into Boeing at the bottom, so to speak, and you're hoping that the dividend would give you some income during this time of potential recovery, that dividend is currently suspended. All right, next on our list today is Marriott International, Marriott Hotels. Their dividend prior to the announcement was $1.92 per share on an annual basis. Stock price today at $78.58, which is off of its 52-week high of $153.39. So Marriott, again, no surprise to anyone who's been following the travel industry. They obviously are seeing huge vacancy rates in their hotels. A lot of locations have closed. So again, there's still a potential here to buy low for Marriott. That's traditionally been a pretty good company, but just be aware that it could take several quarters for this dividend to reappear. All right, next on the list is the Ford Motor Company. Ford Motor Company, their annual dividend prior to the announcement was 60 cents per share. Stock price right now at $5.09. That's off of their 52-week high of $10.56. So another stock that has dropped 50% from its 52-week high. And I think with Ford, what you see right now is just the environment for car sales is small, right? People are worried about having cash on hand and preserving income. High unemployment numbers are generally not good for car sales. So this is one that I could see, well, all the way through the year 2020 that Ford would continue to suspend their dividend. That's speculation on my part. It's just a gut feel. Next up, we have Carnival Cruise Lines, ticker symbol CCL. Carnival had an annual distribution of $2 per share prior to making that announcement of a dividend cut. Current stock price at $13.70, well off of its 52-week high of $56.04. Carnival and the other cruise lines have been a pretty popular topic on YouTube as investors look for opportunities to really buy at the lowest point of some of these companies, and you'll often see folks talk about the dividend as sort of a fallback plan to buying this company low. However, I think we all sort of suspected across the travel industry that we would see dividend cuts, and those are in fact taking shape today. So just note that if you try to buy on the bottom for CCL, you'll likely see at least several quarters without a dividend for income. Next on the list, we have Macy's, and obviously retail is getting hit hard as well. Their annual dividend prior to the announcement was $1.51 per share. Current stock price at $5.18. Well off of its 52-week range, no surprise here. They had a high of 26.33 over the past 52 weeks. They're down to 5.18. Macy's, of course, battling the so-called retail apocalypse with mall traffic declining. Now you basically have malls being closed, stores being closed, and the dividend now being cut, which was at least one positive aspect for investors to consider Macy's. Next up, we got Occidental Petroleum, ticker symbol Oxy. Oxy was once one of the great gas exploration companies. They've been through some trials and tribulations over the past couple years. And obviously in the current environment, we have gas prices tanking, which I will assume makes the exploration of gas and oil not as profitable. So Oxy's seeing a huge downturn here. They also had an annual dividend of $3.16 until recently. They did not entirely suspend their dividend, but they did cut it 86%. That goes down to 11 cents quarterly, or an annual total, obviously, of 44 cents. And what you have here is a stock that had a 52-week high of 68.83. We're down to 11.90. The entire energy sector is getting crushed, and there's a lot of uncertainty around oil prices, when those will go back up, when will demand for oil in general begin to increase again. So with Oxy right now, there's definitely a lot more risk in the market as opposed to the upside. And just know that if you're buying low on Oxy, a formerly very attractive dividend of over $3 per year has since been cut significantly. All right, last one on the board is luxury brand Tapestry. Tapestry most notably makes Coach and Kate Spade products that are popular with women, and purses and wallets, the things of that nature. They had an annual dividend prior to the change of $1.35 per share. That has been suspended. Current stock price of $13.55, and the 52-week high on this one was all the way up to 36. So again, getting hammered. Big part of that is the broader retail environment. So, you know, ironically enough, you would find Coach and Kate Spade at Macy's stores, amongst several others. But again, retail just getting hammered, dividends going away. Tapestry, I think, is one that's kind of interesting as a long-term play because they're not directly retail. They do have stores, but they also have these brands that I think eventually when the economy bounces back, strong brands with Kate Spade and Coach that women have adored for many years. This could be one that I would be a little more comfortable with buying on the bottom, because I think the value of the Kate Spade and Coach brand is still inherently true. It's just a matter of when will the shopping environment come back online from a consumer standpoint. When will discretionary money start to flow back into the market? So Tapestry is actually one, at least from a long-term perspective, I think has some potential. So that's a list of 9 stocks that are cutting or suspending dividends effective immediately. I'm sure that this list will grow. This is not a comprehensive list. There are several others out there. I tried to stay in my lane with companies that I recognized and understood, but that is far from the only people out there who are cutting dividends. And you know what? For most of them, for most of the stable companies out there, this is just a temporary measure. But it is important to note that when dividends get cut, sometimes you see the stock drop relatively quickly as people bail. Particularly dividend investors will bail from one dividend stock to the other. It just depends on what the company is. But it's also important to know that when you buy low on some of these retail and travel plays, and restaurants for that matter, it's important to note that you will not have the safe and secure income from dividends. And that means you have to focus a little bit more on the fundamentals of a business, right? You have to be able to say, I know for sure that this restaurant group will pop back because they have X amount of cash on hand, their concepts are strong, etc. You can still buy low on all these opportunities, but you have to factor in, at least in my opinion, more due diligence on the balance sheet and how things were growing prior to the crisis to get a good feel for how quickly they can turn the revenue back on when consumers get back in the market. All right, guys, hope you enjoyed this video. Please give me a like and subscribe, especially if you like stock market analysis. I'll see you on the next video.